The stock market is like a thrilling roller coaster, full of ups and downs. Recently, we've seen a bit of both. First came a significant decline, causing concern among investors, but hold on tight. The market then staged a remarkable rally, regaining some lost ground. This volatility highlights the dynamic nature of the market and the importance of understanding the forces at play. The recent rally has been fueled by a surge in buying activity. Investors are regaining confidence, encouraged by positive economic indicators and government initiatives. This surge in demand has pushed stock prices higher, creating a sense of optimism in the market. However, it's crucial to remember that market rallies can be unpredictable. While the current upward trend is encouraging, it's essential to remain cautious and avoid getting swept up in the excitement. Market corrections can happen swiftly, and it's crucial to have a well-defined investment strategy to navigate such fluctuations. Market sentiment is like the mood of the market, and right now it's feeling cautiously optimistic. Several economic factors are contributing to this positive outlook. The recent economic survey presented by the government has injected a dose of optimism into the market. The survey highlighted the government's commitment to reforms and its focus on creating a conducive environment for businesses to thrive. Positive economic data has also bolstered investor confidence. Strong corporate earnings, coupled with encouraging manufacturing and services sector data, suggest that the economy is on a path to recovery. Additionally, the government's focus on infrastructure development and increased spending in key sectors is expected to boost economic growth further, fueling market optimism. However, some potential headwinds could dampen market sentiment. Global economic uncertainty, geopolitical tensions, and inflationary pressures remain concerns for investors. These factors could lead to market volatility and impact investor sentiment going forward. Amidst the market's movements, certain sectors and stocks stand out, showcasing resilience and growth potential. Capital goods, a sector closely tied to economic growth, have witnessed a resurgence in investor interest. Companies involved in infrastructure development, manufacturing, and construction are benefiting from the government's focus on infrastructure spending and the overall economic recovery. The chemical sector is another area where we're seeing robust performance. Companies in this sector are leveraging strong demand from various industries, including agriculture, pharmaceuticals, and consumer goods. The FMCG sector, known for its stable demand, continues to be a favorite among investors. Companies providing essential goods and services are witnessing steady growth, driven by increasing consumer spending and a growing middle class. It's important to note that stock selection should not be based solely on sector trends. Thorough research, including analyzing a company's financial health, management quality, and growth prospects, is crucial before making any investment decisions. Diversifying across sectors and market capitalizations can also help mitigate risk and enhance portfolio returns. Section 4. Deciphering the budget's impact on sectors. The annual budget announcement outlines the government's fiscal policies and spending priorities. It impacts various sectors, influencing investor sentiment and stock prices. This year's budget focuses on infrastructure, healthcare, and rural growth. The banking sector watches for measures on non-performing assets. Positive steps could boost investor confidence. The auto sector hopes for incentives to revive demand and promote electric vehicles. Real estate expects measures to boost affordable housing and simplify regulations. The budget's impact is often factored into stock prices in anticipation. Analyze the actual budget proposals for long-term implications before making investment decisions. Section 5. Navigating the market for savvy investment decisions. The stock market can be a rewarding place for investors, but it's essential to approach it with caution and a well-defined strategy. Understanding market trends, economic indicators, and the impact of government policies is crucial for making informed investment decisions. Remember, investing is a marathon, not a sprint. Don't get caught up in the hype of short-term market fluctuations. Instead, focus on long-term growth prospects and invest in companies with sound fundamentals and a proven track record. Diversifying your portfolio across different asset classes can help mitigate risk and enhance returns. Finally, Consider seeking advice from a qualified financial advisor. They can provide personalized guidance tailored to your financial goals and risk tolerance. Remember, investing in the stock market involves inherent risks, and it's crucial to invest only what you can afford to lose.